Telecom major Bharti Airtel is also set to come up with its numbers today. Remember, these numbers will be announced after the company had also indicated that it has reached out to government for equity conversion. But this time, the expectation is that net profit may decline 54% on QOQ basis. Ansh is joining us with more details.
Bharti Airtel is set to report strong operational quarter, so revenue is likely to rise by around 7.7% sequentially to 48,602 crore. Whereas if we talk about Africa revenue, then that is expected to grow by around 2% sequentially in dollar terms to $1.3 billion. If we talk about EBITDA on consolidation basis, then we are seeing that it might go up by around 12% sequentially to 27,505 crore with margin expansion of more than 200 basis points to 56.6%. Now this India EBITDA may boost largely due to Indus Tower consolidation. But on the bottom line, if we talk about net profit, then that may fall sharply by around 54% sequentially to 6,752 crore, as last quarter actually included one-time exceptional gain of around 7,546 crore. Talking about business front, if we talk about segment-wise, then mobile service revenue may dip by around 1%, whereas enterprises business is likely to decline by 4 to 5%. ARPU may rise by from 245 rupees directly to 250 rupees, and this would be on the back of 2G to 4G migration. Also, data subscriber is expected to be at 28.4 crore, which is up by around 2.2% sequentially. Now, apart from these numbers, there are key things to watch out for. First is progress on 5G rollout. Second is capex trend, and third, most importantly, is cues on future tariff hikes.
All right, thank you, Ansh. But let's keep it with the earnings space then. Now, stable US sales and new launches are set to drive Cipla Q4 numbers. Let's go across to Sharad to know what the street is expecting from Cipla this quarter.
In focus is Cipla, and largely good set of numbers are expected to come in for the fourth quarter. Revenue is expected to jump up almost 10% on a year-on-year basis, while interestingly EBITDA is expected to jump up almost 37%, with margins also going up more than 400 basis points if you compare it on a year-on-year basis. Now the profit is expected to come in at roughly 1200 odd crore rupees, which is almost a 28 odd % jump. Now looking at the important factors to watch out for, they includes that US sales are likely to remain stable year-on-year basis, coming in at $229 million in the fourth quarter with new launches in focus. Rev limit contribution is also expected to be good in the US sale. Now keeping an eye on the lanyard ride sales in the US market, while the company has said that the normalcy will resume for US business from 2025. Now, I expect the Indian sales to grow between 10 to 13% on a year-on-year basis, driven by stronger growth in cardiac, gastro and urology segment. European Union and rest of the world is expected to grow by 9 odd %, and US sales is expected to aid the margins, which we had stated earlier. Also, keep an eye on the inhalation and peptide assets for the US markets and the semaglutide for the Indian markets. This is the three important commentaries also which you'll be watching out for Cipla, and the outlook on the CAGA segment in terms of field force expansion and newer introductions. But largely good set of numbers are expected from Cipla.
Thanks, Sharad. Apart from Cipla, Hero Moto is also set to announce its Q4 numbers today. Srishti is here to explain what the street is penciling in from this quarter.
A decent set expected from MotoCorp this time around, while on a YOY basis the number could see a bit of a jump up, but on a sequential basis a slight decline is what we are penciling in. Because look at the move in the volumes. The volume growth remains subdued as the two-wheeler demand did lack expectations. Just on a YOY basis, there has been a decline of 1%, but sequentially a 6% drop in the volumes is what we are anticipating. Other than that, factors at play, the average selling price is expected to improve 3% on a YOY basis, led by the improved mix of 125cc in their product mix. And when it comes to numbers, then let's take you through that. Revenue is expected at 9,654 crores. The EBITDA expected at 1,373 crores, while the margins will be the key to watch out for, because in this challenging environment and challenging volume number, what we have seen is that the margins are expected to be stable, because for the quarter gone by as well as on a YOY comparison as well, not much of a decline is what we are penciling in. They should be above 14%, and 14.2% is what we are penciling in. And lastly, on the profit figure, 1,094 crores is our expectations. But definitely, apart from the overall numbers for Hero MotoCorp, all eyes on the management commentary on not just the demand, but how they see the products mix shaping up for Hero MotoCorp, what is the likelihood and the contribution coming in from the EV segment as well. So all eyes on that as well. Back to you.
All right, then all eyes on management commentary from Hero MotoCorp. But apart from that, Tata Motors is also set to report its Q4 numbers. The auto major is expected to report a weak set of numbers with margins under pressure. Srishti, what's the street expecting on this counter?
So when it comes to Tata Motors number, let me first give you the volume picture. This time when it comes to their India business, both PV and CV have witnessed a decline in their volumes on a YY basis. A 6% decline in the PV volumes, a 3% decline in the CV volumes is what we have seen, while the JLR volumes are expected to grow by 3% on a YY basis. And especially now when it comes to the margins, the CV EBITDA margins is expected to expand. PV EBITDA margin expected to remain just stable around that 7.3% mark. But well, of course, as we know, the key to watch will be the JLR EBIT margin, and this time an expectation of 10.7% is what we are penciling in. Now let's take you through numbers as well. When it comes to revenue front, then 1,23,158 crores is our expectation. EBITDA expected at 16,331 crores, and the consolidated margin expectation is at 13.3%. Yes, on a YY basis, there will be a decline if the numbers come at 13.3%, but sequentially a slight jump up is what we are expecting. And lastly, on the profit figure, one should not compare it on a YY basis because the base had a deferred tax impact as well. And this time, talking about the numbers, 7,669 crores is what we are penciling in. So that's the expectation from Tata Motors on the number front. But the key to watch will indeed be the management commentary amidst all the tariff announcement that has been going on. Yes, of course, the US-UK tariff deal is through, but what was the impact in the quarter gone by, and what kind of an impact is likely with that 10% tariff still through? That will be something that we will be watching out for. And along with that, the management commentary on the domestic demand will be the other key trigger that we will be watching.
Thanks.